Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into Synovus's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Synovus's latest financial performance.
Revenue and profitability overview. Let's start with the top line. Synovus reported a net income of $183.7 million with an adjusted earnings per share of $1.30, which is a significant increase from last year's 79 cents. John, what are the key drivers behind this impressive growth?
Absolutely. The 67% year-over-year growth in earnings per share was primarily driven by an expansion in the net interest margin, which increased to 3.35%. This was achieved through effective deposit repricing and a stable Fed funds environment. Additionally, Synovus benefited from a lower provision for credit losses and excellent expense management.
Loan and deposit dynamics. Moving on to loans and deposits, Synovus has shown strong loan production, reaching the highest levels since the fourth quarter of 2022. Can you elaborate on the loan and deposit dynamics?
Sure. Period-end loans increased slightly to $42.65 billion, driven by strong loan production and core commercial lending growth. However, this was offset by elevated loan payoffs and paydowns. On the deposit side, core deposits stood at $46.0 billion, with average deposit costs declining to 2.26%, reflecting effective cost management despite seasonal declines in middle-market deposits.
Non-interest revenue and expense management. Let's talk about non-interest revenue and expenses. Synovus reported non-interest revenue of $116.5 million and managed to keep non-interest expenses stable at $308 million. What are the highlights here?
The non-interest revenue saw a slight decline due to lower capital markets income and seasonally weaker commercial sponsorship fees. However, the year-over-year growth was supported by higher core banking fees. On the expense side, Synovus demonstrated disciplined expense control, with a 5% decline in non-interest expenses year-over-year, largely due to a $12.2 million reduction in the FDIC special assessment.
Credit quality and capital position. Credit quality and capital position are crucial for any financial institution. How did Synovus perform in these areas?
Synovus reported a provision for credit losses of $10.9 million, a significant 80% decrease from the previous year. The non-performing loan ratio improved to 0.67%, indicating better credit quality. Additionally, the Common Equity Tier 1 ratio ended the quarter at a robust 10.75%, supported by core earnings accretion and $120 million in common stock repurchases.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.11 for Synovus, but the company delivered an adjusted EPS of $1.30. How significant is this beat, and what does it indicate?
This is a substantial beat, exceeding analyst expectations by 19 cents. It reflects Synovus's strong operational performance and effective cost management. The ability to surpass forecasts set by 8 analysts highlights the company's resilience and strategic execution in a challenging economic environment.
CEO's perspective and future outlook. Finally, let's hear from Synovus's leadership. What did CEO Kevin Blair have to say about the company's performance and future outlook?
CEO Kevin Blair emphasized the 67% year-over-year EPS growth, driven by net interest margin expansion and excellent expense management. He noted the strong momentum in loan production and a decline in credit losses. However, he also acknowledged the cautious economic outlook due to concerns about consumer spending and potential impacts from higher tariffs and government layoffs. Despite these challenges, Blair expressed confidence in Synovus's trajectory and the strength of its balance sheet.
Key takeaways. In summary, Synovus has delivered a strong performance in the first quarter of 2025, with significant earnings growth and a solid capital position. The company's ability to exceed EPS forecasts and manage expenses effectively positions it well for future challenges. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Synovus's performance.
Thank you to our viewers for watching. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Synovus's performance in the comments below. Until next time.